Good morning, good afternoon, good evening. Thank you guys once again for joining the 980s podcast hosted by yours truly, Kevin Thompson, founder and CEO of 99 Capital Group. Thank you guys for joining. As I always say, subscribe to the channel. As I always say, go and get my book, MLB to CFP, live on Apple and Amazon. Any questions, comments, concerns, you can email us at info@99capitalgroup.com. Send us your question. Go to the website at www.99capitalgroup.com. Schedule your appointment. As you know, we're here to do what? Educate, empower, engage, and also entertain. Follow us on all social media channels at MLB to CFP or at 99cap. And subscribe to our Substack. Now what? Thank you guys for joining us on this episode, because this is the question I'm constantly getting. It's around data centers. It's around cost. It's around energy. It's around water usage. It's about the run in the stock market and the hyperscalers. And I had to bring on the person I know that knows the most about this, Ivana Delevska of Spear Invest. She is the ultimate voice in this industry. She's the ultimate voice in this field. And she's going to tell us what her thoughts are and how to navigate it. Ivana Delevska, welcome to the show. Let's get it. We have Ivana Delevska of Spear Invest back on the 980s podcast today. Ivana, thank you for taking some time and joining the show for us. We appreciate this.
Thanks for having me, Kevin. Always a pleasure coming on.
Yeah, I've seen so many of your snippets on whether it's Bloomberg, whether it's Yahoo, whether all these different channels, and you're talking about this market that seems never to go down. And I'm curious, 'cause I wanted to get your take on a couple of things. And one is, for example, here in Fort Worth, we have this moratorium against data centers, right? And it's becoming a politicized thing where people are like, no more data centers because of X, Y, and Z. We have the data center coalition here trying to fight for those data centers. What do you think, or what do you see that a politicization towards no more data centers from the municipalities, how will that impact your thesis around the hyperscalers moving forward?
Well, Kevin, it's really all about supply demand, right? So if there is demand, the supply will find a way to come to the market, whether it's data centers on Earth or data centers in space, right?
Okay.
So I think that the thesis of data centers on Earth is still valid. I think there are many areas that are having significant pushback against. New York is where I'm based, is another one of those examples where they're really kind of trying to ban further data center development or discourage further data center development. So that is a trend that we see continuing, especially in areas where the communities are really fighting against that. I think there are also areas just to keep in mind that maybe we are not as familiar with, me and you, where they're very rural and the communities do need this development to come to place and help them with their utility bills and whatnot. So the way we are trying to position ourselves, or from an investment perspective, is find the companies that have access to a pipeline that has significant access to these types of areas. So I think still today there is the fiber belt basically going from Louisiana to Texas, and all along that line there are many places where there's still an opportunity for development and the utilities are friendly. Also, the Dakotas is another example where they are open for business. They're one of the examples where like there's not enough community pushback against this. People are actually welcoming the data center. So, I mean, we're going to see how far it goes. We are very compute constrained. Every day that you wake up, you hear whether it's Anthropic, whether it's the Chinese models that come to market. Both of those are in the same boat from compute constraint. So we do need to add more capacity. And that kind of makes the case, even though the technology is still not there yet for data centers in space, we think that's a valid path going forward.
We hear the word compute time and time again. Again, I am a cynic. I typically say, well, when I hear these things like from Silicon Valley, I think they're trying to sell us something, right? I think they're trying to sell us on an idea. And I'm consistently still in that camp of we're compute constrained, we're all these other things. But the average individual, like myself, we don't even understand what that means and how that impacts us. Can you kind of explain to us, like, why is that so essential? Why is compute so essential? It hasn't been essential since the dawn of the internet. Like, the internet's been here for a long time. So all of a sudden, we're constrained with compute. Why is that the case?
So really, the way it plays out is in two areas. One is
Mhm,
in model training, and the other one is in inference. So
mhm,
when you're compute constrained in model training, you're limiting the capacity of developing better and better models.
mhm,
So the first models that we saw coming, like the early versions from OpenAI and ChatGPT, they were really just able to respond to questions
mhm,
being trained on a large set of information that was out on the internet. So if
mhm,
you had stopped there, you would still have that model available to use. Now, what companies like OpenAI and Anthropic are trying to do is they want to stay ahead of the game and introduce new solutions. So
mhm,
right now, the new models that they're introducing, like Fable, they're able to not be much more advanced than the earlier versions and
mhm.
be able to reason.
Uh,
So that's really where the compute constraint comes in. As you try to develop these models, you will need more and more compute and better chips. Then the other side where compute comes into place is literally your computer, and in an enterprise would be thousands of people's computers. So these
mhm,
are people trying to use AI, and they're using it for inference,
mhm,
right? And in this new era that we believe we're entering, is we're first compute constrained on the model training side, but that's been somewhat addressed. NVIDIA has added capacity, and we've kind of known or mapped out how much do we need for that type
mhm,
of model development to happen. So no real surprises are coming on that side. Where we see the surprises coming is more on the inference side. So this is basically more and more people creating AI agents,
mhm.
and that's really constraining literally the type of computers that we used to use in the past. So the setup of these computers is no longer just GPUs or multiple GPUs per CPU. It's really one GPU per CPU. So this is why you're seeing companies like AMD, ARM, Intel come back into play. Those are the newer ideas that are good plays on the agentic AI era.
Okay, we hear again, agentic, compute, all these words come to the average individual like myself, and we're just like, oh, okay, it makes sense. And then, of course, we could talk about the Bitcoin and the Web3 and all the other stuff. It's like, okay, as a consumer, we just take that information. But you mentioned this. You said the ability to pay for it and the rural areas. The rural areas are the ones that are getting these huge data centers because energy is inexpensive there, right? I can build a massive data center and pay 3 or 4 cents per kilowatt hour. And what people don't understand is that that needs to be subsidized somewhere. I mean, there's energy that comes onto that grid, and there's supply and demand, like you mentioned. Are the people ready? And I know this is more like I don't want to get into the politics side of it, but are the people ready for what that actually means in regards to supply and demand on the electricity side, the subsidies on that perspective? Are this data centers? I know there have been talks about, oh, we're gonna subsidize, we're gonna pay that cost. But at the end of the day, supply and demand, like you mentioned, so are the people ready for that?
Well, this has been a big area of pushback, Kevin, and this is why earlier in the cycle we were very excited about IPPs.
Mm-hmm.
But as we started seeing this as a potential risk on the utility pricing side and how communities could start pushing back because they don't want to pay the prices, behind the meter has become a real alternative for this. So this is basically where you just build capacity for your specific data center, and it doesn't really plug into the grid, and it doesn't really affect electricity prices. So there are different ways of doing things. If you have dedicated supply, the economics will be slightly worse. And it is actually slightly worse in the long run, because if you do have excess supplies, you can't sell it back to the grid. You're kind of stuck with whatever you have. So there are pluses and minuses of each approach. But that's one thing, one reason why you see the Bloom Energies of the world do so well, and then some of these other alternative supply sources, because as of right now, gas power generation is sold out through 2030. So if you're coming up with a project today, you really need to find some alternative source for the energy, because you're likely not drawing it from the grid unless you have an agreement with a utility, and you're not putting a gas powered plant. So this is why there is so much focus, and like to many people, even in the space industry, the idea of data centers in space seems completely crazy. But when you have such a demand driver and so much untapped energy, you see why people are really pushing the boundaries here and innovating in that area.
I have a tendency to call out those types of things, especially in the space deal, because if the chips are basically obsolete by the time you send them up, right? Every 3 to 5 years, there's a new chip that comes on. It has to be quicker, faster. Like, what are we doing? Are we just gonna? Are they gonna be tied to a rocket that can come back down? That can get? I mean, I don't understand the economics behind that. But that's a whole nother podcast for us. But when we talk, you mentioned this about valuations, about capex spending, about the energy. Are I'm not trying to say we're in a bubble. I'm not gonna say that, because I've heard you say no, we're not there, and all the other stuff. So I'm gonna go on your side of the fence on that. But are we headed towards another fiber optic? Like, back in the 90s, we built that out so rapidly, and we didn't start using it until like a decade later. Are we in that same camp where we're just building this out, and then it's finally going to come to fruition maybe a decade later, and these companies finally grow into those valuations?
Well, Kevin, the interesting thing on that point is that when we were earlier in the cycle, when we started building these data centers out, the assumption was that they would only be useful for 1 to 2 years, right? And then the next generation of chip will come and it's going to be so much better. The new thing that we're finding out is that even the older chips are having a much longer useful life than we previously anticipated. And even if we take those plus the new ones, we still don't have enough compute capacity. So the good news here compared to the fiber optics build out is that we are still lagging the demand by 1 to 2 years.
Okay.
So as long as we stay in this type of situation where new models are coming up, cheaper models are coming up, they're generating incremental demand, and the supply is behind it, we're in a good place. Once you start seeing companies overbuilding, whether it's on the memory side, on the CPU side, on the GPU side, these are cyclical industries, right? So you will get to a point where we've expanded enough capacity that we are either staying ahead of demand or keeping in line. That's when you would see the hardware layer come under pressure. So that's basically the way we do it, is we model the supply demand. And as long as we're comfortable that 2 to 3 years out, the demand is significantly exceeding the supply, that gives us comfort on the current dynamics.
Ivana, I always love your input, because you give us a side of things, because I'm not gonna lie, like I'm not a Luddite, right? I believe in technology. I understand it, and look, we're using technology now. We're using the chips right now, right? And I believe in it. But I also have a side of me that says I want to call the BS in regards to, like, I think Silicon Valley has done a superb job on selling us a bunch of stuff that hasn't come out yet or hasn't done what it's supposed to do. And again, I have an iPhone. Well, that's great, but that's been the same iPhone for the last like decade or two. Like, it hasn't really changed anything, but they just keep just recycling the old garb of, like, this is going to be the greatest thing since sliced bread. And then you see BYD overseas with these beautiful cars, and China doing these things, and you're like, what are we doing? And maybe that's what it's about. Maybe it's about we're trying to get in front of China so much that we're just going to be able to gonna spend so much money. My question to you is, you just mentioned that, are we overspending? Well, the capex is in the trillions of dollars. are we getting there, or are you hesitant to say, what, let's pull back on some of this stuff?
Well, Kevin, really the way to look at this is 100% just focusing on demand and
Mhm.
seeing how much runway there is from that perspective, right?
Okay.
So Anthropic really surprised us. We're like super bullish on the AI cycle, right? And Anthropic really surprised us with this $100 billion potential run rate by the end of the year. I mean,
Yeah.
they came from zero, right? So all of a sudden, in a span of a year, you're creating a company that's generating $100 billion in revenues.
Sure.
And then furthermore, they are actually, if you look at the economics, that was another thing that surprised us is that they're not actually losing. We would have assumed that they're losing their shirt on these models and giving them away for free. They're actually making pretty decent economics, and their gross margin expected to be gross margin positive. So basically that tells you that not only that there is demand, but the economic sense actually makes sense for some of these applications. So that gives us a lot of comfort. Now we do need to see how long they can keep this growth rate, right? Are they going to grow from 100 to 200 billion? Because those are the types of numbers that we need to keep seeing for the story to keep growing. And it's not specific to Anthropic. Even if Anthropic and OpenAI don't do well, but the cheaper models do well, that's another positive for the hardware trade. So I think that the landscape is changing a little bit from, let's say, 4 years ago. You could pretty much buy any stock and make money. I
Mhm.
think right now you really need to understand the intricacies of the exact product that each company offers, because some of the products are at the beginning of the cycle, like I mentioned CPUs. Some
Mhm.
of the products actually we are in year 3, year 4, year 5 of the cycle. So maybe you want to stay away from those. So that's really what we do. We map out the entire value chain and we see where we early and where we coming close to the end of the cycle.
Well, last question. Thank you so much for this. This is going to be the last question because I like to keep these short. Are you concerned? Because capitalism, it's about competition. It's about having multiple people in the chain where we can keep prices down. But at what point do we grow concerned when there's a Google that's buying 14% stakes of Anthropic and then stakes of SpaceX? Is there going to be a problem where these companies have so much money that they can just buy large stacks of each of these other companies, and no matter who wins, they're winning? I mean, should we from an antitrust perspective look into that, and is that a problem?
I think it's something that we should definitely be looking into, and it's for sure a trend because what's happening is now the dollar amounts are becoming so large, is that no single company can invest $1 trillion in
Mm.
a data center capex project, right? So it's getting spread across whoever has money and whoever has access to the capital markets, and the mega caps are the only ones that do that. And then similarly, if you look at the value chain, the value is really all accruing to the hardware. So the NVIDIAs, the memory companies. So these are the companies that are generating the cash, and therefore they're the ones that are able to make the investment. So there is definitely a concentration. The wealth is definitely concentrating towards mega caps. This has been a trend that's been going on for a while now, right? Like that's how the mega caps got created in the first place. I personally, this is just my personal view, believe in a free market, and I do think that things get resolve themselves with new competition. So the same way, if you look at some examples, like the moment Meta comes under pressure and they're dropping the ball, they get a new Chinese competitor like TikTok. That was like 3 or 4 years ago, right? So
Mm.
I think the dynamics are much more competitive than they appear, even though the market has gotten so concentrated. So the moment, like even Google, you would think that they would be dominating everything right now. They have the data, they have the models, they have the hardware.
Mhm.
One little misstep on Gemini, and they're in the doghouse.
Yeah.
So it's much more competitive than what it seems at high level.
Well, Ivana, I'm going to let you go because I know you have more of these interviews throughout the day. I appreciate what you do. I am so happy that, I mean, I don't want to talk about our stock positions because I don't want to get us in trouble. But I mean, you've done very, very well. I appreciate it. And again, I want you to continue to have success. Thank you for all you do. And looking forward to speaking to you here again.
Thanks, Kevin.
We just had Ivana Delevska on the show in the 90s podcast today, and we talked about all things hyperscalers, data centers, all the things that go into this huge capex spend a lot of these companies are facing right now. Is it sustainable? Is it something that we're going to regret in the future? Well, only time will tell, but Ivana has the utmost knowledge on the inside of what's going on. But I appreciate her being on the show today. And again, more to come from this. As you know what, subscribe to the channel. Go and get my book, MLB to CFP, live on Apple and Amazon. You have any questions, comments, or concerns, you can email us at info@ninecapitalgroup.com. Send us your questions. Go to the website at www.ninecapitalgroup.com. Schedule an appointment. As you know, we're here to do what? Educate, empower, engage, and also entertain. Follow us on all social media channels at 9cap or at MLB to CFP, and subscribe to our Substack. Now what? Guys, it was a wonderful episode. Quick, to the point. I like to keep these quick because you know what? Time's of the essence. And thank you for your time. Stay well, stay safe, my friends. I'll see you again soon.